earnings, right? So one of the persons that I know that I really, one of my favorite guests is someone who really understands fundamentals, because the reason that we held Apple, I recommended Apple to my subscribers in 2014. It is still officially open. We've had 59 alerts on the stock since then. And the reason I kept it open, three things I do. I look at fundamentals, technical, and behavioral analysis. So for fundamentals, I've asked Main Street Asset Management, LLC, Chief Investment Officer Aaron Gibbs to join me. And Aaron, thank you so much.
Thank you.
All right, let's go to fundamentals. What do they mean to you? How should the audience understand them? Starting with profit growth.
Sure. So when we're talking about fundamentals, we're really talking about how the company operates, what is it doing. And so the four qualities that I really like to look at when you're investing, and it's really hard to find the right stocks, right? Profit growth. Are they making more money? Did they make more money than last year? Are we expecting them to make more money in the future? And that's really, particularly in the future, is more important,
right,
because the stock market really likes to look forward, not in the past. So I don't really care what you did for me last year as much as what you're going to do for me next year and the year ahead. So that's a big one.
This is also sort of a validation to a degree of execution, of management's ability to execute, because we always hear how something is a big-time industry. It's a trillion-dollar industry, but not every company in that industry is doing well.
Yeah, and you can have a lot of sales, but not necessarily, you spend so much money in creating those sales that you're not profitable.
Right.
And really what it comes down to is, are you able to deliver profits,
right,
deliver income to your shareholders? The next one is quality. And quality really just means consistency, stable. It's like when you're going to ask somebody to drive you to the airport, do you ask your flaky friend or the person that is going to show up on time?
Right.
And quality is really about, they consistently deliver their earnings, they consistently deliver dividends, and we're usually talking like over a 10-year period. So
right,
quality is really just about that person that you can rely on, that company that you can rely on. Value, much like what you just talked about, Corning, it's all about when you buy it, getting it cheap. If you buy it expensive, it's less likely to be able to appreciate or go up as much. So if you're getting it cheap, you just have a better likelihood of having that outperformance, having those returns, and ultimately also there's probably less risk on the downside if you're buying it cheap.
And efficiency.
Efficiency is how much returns, how much profit can you make for the amount of money that you've got, the amount of debt you've taken on, the amount of equity that you have, the amount of assets that you have,
right,
how much can you make on that profit? And companies that are more efficient can weather bad
right,
storms. They're the ones that have that lower risk and can deliver those higher returns year after year after year.
That's why she's one of my favorite. Aaron, thank you so much. Appreciate it. Well, you come back a little bit later, okay?
Yeah.